Well, hello everyone, and welcome to Calculating the Annual Percentage Rates of ETFs. I'm your host, Dr. B. Today's episode is about XLK, the Technology Select Sector Spiders ETF. Last year, when I calculated the annual percentage rate based on a 10-year growth, the annual percentage rate was 20.41%. And you can see, according to the graph, if you invested $10,000, 10 years later, it was worth $73,220. However, this year, if you invested $10,000, and here it's coming up, let's show you what's going to happen this year. Well, your $10,000 investment on June 2015, is $66,076. That's still pretty good. That's actually quite good. You're not doubling your money, you're quadrupling your money, more than that. Now, let's take a look at what's going on here. Let's go back to the graph where it says June 24, 2024. Back then, the year-to-date was 18.86%. But if you look in above June 24, 2025, where it says the year 2024, you'll see it says 21.63%. So it went up a little bit. Now this year, yes, the market has rebounded, it's up. So technology is up 3.63%. That's not much for technology. That's why a $10,000 investment 10 years ago is $66,076. That's still an awesome lot of money. Now, is it 20.41% now, annual percentage rate based on 10 years? No, it's a little bit less, and we're going to calculate why it's a little bit less. Now, let's figure out where we're going from here. And here we go. Last year, 100% technology. Now, it's kind of futile showing this graph because you're not going to be investing in any other sector, even though the category average is only 78.51%. I say only because still, if you're invested heavily in technology, you're still sprinkled out throughout other sectors, and you should be. You shouldn't have all your eggs in one basket, but now, as of June 24, 2025, that category average is now down to about 77%. Still, 77% based upon an investment that's really 100% of technology. Now, what is it still made out of? Well, let's look at these companies that were part of XLK a year ago, a major part of XLK. There were 65 holdings, and the top 10 are listed here. There's no reason to go through all of them, but I think it's very important to look at the top four. Microsoft, 22%. Apple, 21.76%, NVIDIA, 6%, and Broadcom, 5.55%. Their turnover, the reported turnover was 19% based on a report on September 30th, 2023. But all these top 10 represent 69% of the assets. What has changed in the past year? Well, now there are 69 holdings, and what has changed is quite a significant difference. Microsoft is still at the top dog, but it's gone from 22% down to 14.25% of the percent weight. NVIDIA jumped to number 2 position. It went from 6% to a position of 14.22%. So the fund managers, and there are several fund managers that are helping out with this ETF, they saw, NVIDIA's done well, so we're going to put a lot of money into NVIDIA. Apple went from a 21.75% holding to almost 12% holding, so that's down significantly. But still, 12% of Apple is a lot. Broadcom is actually relatively the same, about 5.11%. And let's see, Palantir has entered the top 10. They've been in news lately. That's at 3%. Intuit rounds out the top 10 at 2.19%. So there's 69 holdings that are in XLK. What else is important here? Well, now look at this. The turnover, you can see there's been a lot of changes, so the turnover has gone up. It's at 39%. That's high turnover as of September 30th, 2024. Again, that's 9 months ago. So let's look at a 5-year chart. On the site I use, which you should know by now, which is Morningstar, They don't have a 10-year chart. They have a 5-year chart. So let's go back 5 years. XLK, it's up a whopping 147%. Vanguard Growth Fund is up 118%. Oh, what do we have here? Vanguard Total Index is up 92%. Now, if you're wondering what the plus 144 means, that means the ticker, that means the price has gone up 144 points for XLK. VUG has gone up 228 points. That's significant. So it's over doubled. That's why it's over 100%. So it's more than doubled. VTI is up 141 points, and look at VXUS. That's up only 19.55 points. That is up and down. That's the blue right here, the blue graph. But that's up 41%. Again, why do I put up here? But again, any wise financial advisor and wise investor, you should have your money into international. This is why on my website I have updated it. I now am a minority owner of 12,000 worldwide companies, 3,500 domestic and 8,500 international. So if you just invest in these 4 ETFs, you're doing quite well, ladies and gentlemen. You don't need 25 ETFs. You don't. But if you get involved with a financial advisor, they may have you in a plethora of ETFs or mutual funds. Let's see what we have next here. Well, let's figure this out. Well, yes, present value is $66,076. The principal amount is $10,000. Here's our formula. We would remind you that the dividend is calculated quarterly. So we're going to go through the math real fast. Why real fast? By now you should know what we're at here as far as the statements and reasons. This is a proof that we've been doing. I started over a year ago. So let's get through the first statement here and the first reason. First statement, and it's a little bit slow right now. That's the compound interest formula. There's your compound interest formula. And then we're going to do some substitution going on. Again, this is a little bit slow right now. Substituting present value is $66,076 based on an initial investment of $10,000. We're going to compound this 4 times a year, and the 40 means number times compound times number of years. 4 times 10 years is 40 times compound in 10 years. And then from there, we're going to do division property of equality. We're going to divide 10,000 into 66,076 and get a decimal of 6.6076. 10,000 goes away. And then we're going to put the natural log of both sides. And when you natural log both sides, you get the natural log of 6.6076 equal to 1 plus r over 4 raised to a power of 40. So there we go. This is a little slow here tonight. So sorry I can't go any faster. I'm just going to have to go faster with my voice a little bit. And then we apply the application, natural log, you use your calculator. If you type this in, natural log 6.6076, you'll get a 1.88822. It's equal to 40 times the natural log of 1 plus r over 4. The 40 then becomes a multiplier. And then you divide, use division property of equality, divide 40 into 1.8822. You get a much smaller decimal. And that decimal is going to be 0.0472. That's equal to now the natural log of 1 plus r over 4. I can't get my picture up here now, but you know what I look like. You can go to my videos and see what I look like. So my camera is not working. That's kind of a good thing. So we have a little bit of extra space here. So what comes next? Again, wow, this is very slow tonight. But here we naturally do the natural exponent of e. We e both sides. So that decimal of 0.0472 now becomes an exponent. So again, when you take a number raised to the power of 0, that's going to be a 1. So this decimal e to 0.0472 will be a little bit more than 1. It's going to be exactly, I would say, about 1.04833 if my mind is correct. There we go. That's equal to 1 plus r over 4. The e and natural log cancel each other out because they are naturally inverses of each other. And then from there, we are going to do subtraction property equality. We'll subtract the 1 from the 1.04833, and then we get a wonderful decimal of 0.04833. And then we want to get rid of that fraction, so we do multiplication. We multiply both sides by 4, multiplication property of equality, and when you do that, you will get 0.19232 or 1.91933. You only need 4 decimal places, and here's why. If you multiply both sides by 100, you get your decimal rounded to 2 decimal places of 19.33%. So this is still an outstanding investment. Where are you can get 19.33%? Now, am I always going to guarantee this? No, we cannot always guarantee this at all. We can just go guarantee that the math is correct based on the past 10 years. So if we keep on working here, we see, according to the rule of 72, initial investment of XLK could double in 3.7 years. How do you get that number? 72 divided by 19.33 is equal to 3.7 years to double your investment. No one can ever promise you'll double your investment in 3.7 years or 4 years or 5 years. No, they can't do that. They can only go by past performance. But once again, past performance does not equal future results. So I want to thank everybody again for watching my video. Please subscribe, hit that like button, and please tell people about this information. I think it's pretty important. Thank you very much, and I'll see you again next month with another ETF update.